We're here at StableView TECH18, and I'm with Richard Carleton, the CEO of CSE. Richard, thanks for joining us today.
Pleasure to be here. Thank you.
So, what's your opinion on the tech boom these days, and specifically how tech stocks are performing?
Well, we obviously saw a lot of fintech and in particular blockchain-related companies, as well as companies that are dabbling in the crypto space earlier this year. We're not seeing as many of those stories come to market at the moment. I think there's a little bit of skepticism in the investment industry about maybe the long-term prospects for cryptocurrency specifically. And on the blockchain side, I think there's a case of maybe overhype in the early, like at this point, and probably underhype in the long run. But of course, it's really incumbent on the companies to tell, even though they're using blockchain, what specific problems they're going to be solving, and what the addressable market is for the particular products and services that they're going to be offering.
Richard, we know that the CSE is very much known for its cannabis stocks of late. What does the exchange have to offer tech companies, early stage tech companies?
Well, really the proposition is the same. What we're trying to do is offer the lowest cost of public capital to companies, regardless of the field that they're in, whether they're traditional Canadian mining exploration or oil and gas exploration companies, or some of the new economy industries that we're seeing more of these days. I think the important thing is that what we've demonstrated in the cannabis space is that not just for Canadian companies is it a good thing to be a public company in Canada and listed on the CSE, but increasingly we're seeing companies come from international destinations. So not just the United States, but increasingly we're seeing companies from the Caribbean, from South America, from the Middle East look to Canada to raise public capital, get liquidity for their early stage shareholders, and be able to operate and grow in a regime that is in fact very friendly to early stage companies.
And going forward, now that we're almost into 2019, Richard, what's your outlook for tech stocks, but also just for the stocks on the exchange as a whole?
Well, I know that we're extraordinarily busy in our new listings area. So we have a lot of companies that are under active review at this point. We're also seeing for the companies that are listed now, they're incredibly active in terms of secondary financings that are being done on the exchange. So from that perspective, we see a continuation of both of those trends, both a lot of fundraising activity from the existing companies and a lot more companies choosing to raise public capital. I guess the one thing that I would like to address is, we're doing a lot of international outreach. And so we're talking to folks in the United States. We're talking to people, in fact, next week I'll be in Israel, meeting with a number of companies that are looking to raise growth capital. Israel's not a particularly large capital market, and it's distant from the big consumers of information technology, for example. So coming to Canada, which is a very friendly jurisdiction for these companies, they can raise the growth capital required, yet have access to U.S. capital market sources through the arrangements that we've got in place, I think is an incredibly powerful and important story. So before the year is out, we'll start to see that pipeline begin to open up. We'll see companies from Israel. We've seen a lot of companies come from the United States into the cannabis space, and we're hoping to bring that and apply that learning to the technology space as well.
Richard, thank you so much for taking the time to speak with us.
My pleasure. Thank you.